that in the first 100 days, focus on Africa for the first time in the history of this country. Are you planning maybe in the future visit the continent?
Sure, I would do that. I would do that, absolutely.
Mr. President, what's the biggest challenge? Do you mind Mr. President?
Mr. President,
yeah, go ahead.
will you speak to the Prime Minister of Australia at all? Mr. Trump, the Australian Prime Minister is having an election this weekend.
Yeah.
Will you speak to him about trade?
They are calling, and I will be talking to him, yes.
Did you happen to do something with the tariffs and automobiles? Were you worried about the automobiles?
No, not at all. We're just giving them a little chance because in some cases they can't get the parts fast enough. So this is just a little transition. It's 15% for 1 year and just 10% for another. It's a little bit. And it has to do, that's only the percentage of parts on the car. So it's a little bit of help for people that will be doing a great job. And these are all people, for the most part, that are building plants and will be working here. So it's a little transition. Go ahead, what? India's coming along great. I think we'll have a deal with India. The Prime Minister, as you know, was here 3 weeks ago, and they want to make a deal. We'll see what happens. Thank you. Thank you.
Well, there you have it. President Trump making remarks as he made his way to Marine One to then head to Joint Base Andrews, where he heads to Michigan for a rally tonight to mark 100 days in office. A few headlines there. We joined that in progress, but earlier he said that Jeff Bezos was a good guy. He said that he's going to be reducing people's taxes. He also said, as you heard just now, we'll be talking to the Prime Minister of Australia about trade, and India's coming along great. We're going to have more if he does make additional comments throughout the duration of our program. We'll bring those comments to you as we get them. Well, speaking of President Trump and Washington, D.C. and the White House, Elon Musk really bounded into Washington as a special government employee earlier this year. He joined the president in his meetings with foreign leaders and cabinet secretaries. He weighed in on defense and tariff policies, and perhaps most notably, gutted dozens of agencies as the public face of Doge. But in terms of Musk's personal wealth, that alliance has cost him quite a bit of money, $113 billion, his fortune tumbling 25% since January 17th. That's according to the Bloomberg Billionaires Index. Dana Hull is a Bloomberg News senior technology reporter. She's also a contributor to the Elon Inc. podcast. She joins us from San Francisco. Dana, talk to us a little bit about how you measured this wealth decline. Is it just within Tesla because that's the publicly traded company, or have his private investments also taken a hit?
So Musk, obviously has 5 companies. Tesla is the largest source of his wealth, but SpaceX is actually pretty important too. And his net worth typically tracks Tesla and how Tesla is trading. So as you saw our story today, we kind of two bar lines, Elon's net worth, and one is Tesla's shares, and they really track in parallel. So when there are big swings in Tesla's stock, there are typically big swings in Elon's net worth. And what we discovered, everyone knew that there was this big public backlash against Musk and Tesla because of Musk's work with Doge, but we hadn't really quantified it. And then when we actually started looking at the data, it was like, oh, wow, like he has lost $113 billion since inauguration. Wow. That is 25% of his net worth. Granted, things change every day. The stock market has been gyrating wildly because of tariffs. So this could be moot 3 weeks from now, but it has cost him quite a bit to be so publicly aligned with the president.
What about his private companies, though? Because there has been news that those companies would be set to receive some type of funding from the government.
Well, SpaceX, for example, is a long-time government contractor, and they, bid on proposals and they win because they are a very good company. They are a low-cost launch provider. They have long-standing relationships with the Air Force and Pentagon and NASA. They stand to gain even more contracts going forward. So SpaceX has an incredibly high valuation. I believe the last we reported, SpaceX is worth $350 billion, which makes it the most valuable startup in the U.S. And I imagine that SpaceX's valuation will continue to rise. But I don't want people to have the impression that SpaceX is somehow getting contracts that they are not, that are not valid. I mean, they have always had a lot of government contracts. They have long been a government contractor.
Talk to us about Jared Isaacman, who you mentioned in the piece, Dana, who now has a role at NASA.
So Jared Isaacman is a billionaire in his own right who led a payments platform, and he has twice paid to fly on SpaceX rockets. He has been nominated by President Trump to lead NASA. He had his Senate hearing. He has not been confirmed yet, but this is someone who just sort of knows SpaceX really well, and obviously is like well positioned if he leads the agency to, work hand in hand with Elon on projects going forward.
What do we know about when Musk is set to leave Doge? And then I'd love to get your take, Dana, on just what you think Musk's legacy and his role in the U.S. government is going to be in the future.
Yeah, so first I want to kind of push back on this idea that Musk is leading Doge. The truth is that Musk is a special government employee, so by law, he's only allowed to work for the government 130 days out of the year. If you started the clock on Inauguration Day, that 130 days ends at the end of May. But the White House has a lot of discretion in terms of like how they count the days and the hours. If Musk is tweeting at 4 o'clock in the morning, is that working for Doge or not? So they have some discretion about that. But what Musk did say on the most recent Tesla earnings call is that he's going to be reallocating his time kind of away from Doge and back towards Tesla. This was clearly designed to kind of help Tesla shareholders feel better. But Musk has sort of always worked in this way where he will focus very intently on something and then kind of ratchet back a little bit. So, he's going to continue to balance his responsibilities with Doge, with his companies. I don't think you're going to see him be quite as public as he has maybe in the early January, but at the same time, he's still tweeting about Doge a lot. He tweeted out something about being like the Doge father with this badge. I mean, he's still very much the public face of Doge, even if we maybe see a little bit less of him going forward.
Dana, $2 trillion.
You asked a really good question about his legacy.
Oh, go ahead. I think we're having a little trouble with Dana's connection.
You asked a really important question about his legacy. I mean, sorry.
No, you're good, Dana. It's just a little bit of a delay, so go ahead. Yeah, go ahead with the legacy.
Okay. You asked a little bit about his legacy, and I think, unfortunately, the legacy is that he will forever have cemented Tesla's brand with the Trump administration. You saw President Trump selling Tesla cars on the White House lawn, and for the company going forward, it's going to be very difficult to ever disentangle that. A lot of people are they see Tesla and Trump now as one and the same, and they are kind of punishing the company by not buying cars, having all these protests, and it's like a real brand issue for Tesla going forward.
All right, Dan, I'm going to try one more question with you. If it doesn't work, we're going to have to go. $2 trillion is the number that Elon promised in wasteful government spending that he would cut. But now it's just a fraction of that. What do we know?
Well, one question is whether the promise was over a 10-year period or annually. The most recent thing that Elon said was that they would cut $150 billion from the budget in fiscal year 2026. That is much less than the $2 trillion initially promised at Madison Square Garden. I think there's some nuance in terms of how that figure is being accounted for. But the other thing is, you can't just look at the promised cuts. You have to look at the cost of laying off all of these people, the cost of the litigation, the kind of brain drain and the institutional knowledge that has left a lot of these agencies. That comes with a very real cost that is often not accounted for on the other side of the ledger there.
All right, Dana, appreciate you joining us. Check out her story along with Kurt Wagner. It's on the Bloomberg terminal and, of course, at Bloomberg.com. Dana Hull, Bloomberg News senior technology reporter and contributor to the Elon Inc. podcast. Well, Goldman Sachs CEO David Solomon says activity in M&A and public listings will find a comfortable level despite uncertainty. That's led to a slowdown in activity across investment banks. He spoke exclusively to Bloomberg's Francine Lacroix at the Norwegian Wealth Fund's annual investment conference in Oslo.
We're 100 days in, and I would say there are a handful of policy initiatives that are being put forward Some of them certainly are very, very interesting and intriguing to the market. But what's been put forward on trade so far has raised the level of uncertainty very significantly. And so I'd say 100 days in, we need another 100 days to kind of see where the policy directives are going and to try to have a better understanding of how what's talked about so far, particularly with respect to trade, is ultimately going to be put in place, how it's going to play out. But the policy actions to date have raised the level of uncertainty to a degree that I don't think is healthy for investment and growth. And I think it's going to be important that we get more clarity on the direction of travel from here.
What, for the markets? So if you look at markets, there's been a sell-off, a pretty dramatic sell-off in U.S. assets. It's somewhat come back, but has it been too drastic?
Well, it's not just for the markets. You know, first and foremost, it's for businesses, it's for individuals. When there's a high level of uncertainty, people tighten their belt, they invest less, they spend less, and all those things slow down growth. And so, you know, one of the things that has happened over the course of the first 100 days is that the perspective on forward growth has been decreased. And so when you decrease, you know, that perspective on forward growth, that changes investors' perspective of equity values. So what we've seen is a relatively orderly kind of repricing of equity assets. And what's unusual in the context of this repricing is generally when you have that kind of equity market stress, people run to treasuries or safe haven, but here we're seeing a slightly different rotation because of the nature of the policy. We've seen a weakening of the dollar, you know, at the margin, and so that's been different than I think what people expected.
Well, are treasuries still a safe haven?
I think U.S. treasuries absolutely are a safe haven, but you can reprice a safe haven asset as people's preferences shift slightly. You know, I think at the margin, we've had for a long period of time a trend of capital flows into U.S. assets. And, you know, at the margin, people are looking at their portfolio constructions and saying, given the uncertainty that's been raised in the U.S., do we want to rebalance that a little bit? And I'd say the rebalancing so far has been at the margin. Investors can rebalance their portfolio in two different ways. If you're over here in Europe and you have a European investor, they can sell U.S. assets, but also if the relationship between the dollar and the euro changes, that rebalances their portfolio weighting too. And so we've seen that over the course of the last few weeks.
Well, there you have it. Goldman Sachs CEO David Solomon speaking exclusively with Bloomberg's Francine Lacroix at the Norwegian Wealth Fund's annual investment conference in Oslo. For more of that conversation, head on over to Bloomberg.com or check it out on the Bloomberg terminal. Well, let's get a check on some stocks that are on the move today. With us is Bloomberg News cross-asset reporter Isabel Lee. Isabel, what are you watching?
American Tower. So shares are edging higher by almost 5%, and that's after the company reported earnings that beat expectations and gave an outlook that is seen as positive. So American Tower is a wireless communications real estate investment trust. So that took me a while to really understand. So for the first quarter, the adjusted EBITDA was higher than estimates, as was the revenue. And for the year ahead, it was the same story. We have KeyBank Capital Markets saying the results are positive, and the better than expected on key metrics results was great. We have Citi saying the same thing, the results are positive. And we have MoffettNathanson saying that these are strong results, and they said that this bodes well for the growth over the coming periods.
You're also looking at shares of Honeywell, right? Gaining almost 5% today.
Yes, lots of green on the screen. So Honeywell, it's an industrial conglomerate. They raised their full year guidance for their EPS. So the company, which plans to split the company into 3 separate companies, also said that they will use a multi-pronged approach to offset around $500 million in tariff exposure. So this includes targeting pricing moves and finding alternative sources for supplies. And still, the outlook for the demand remains uncertain. We have JP Morgan giving a nuanced comment. They said that, quote, "It's a solid quarter, though not quite as strong as the headline suggests, with most of the upside from the below-the-line items for the first quarter." Citi also gave a nod. They said that raising the EPS outlook and offsetting the $500 million of tariff exposure reflects agile operational execution.
All right, you're also watching shares of Pfizer in the pharma space. What's going on with Pfizer?
This is also edging higher by nearly 4%. So the company is cutting another $1.2 billion from its spending while they really search for the next big hit. We know that their obesity pill failed. In an interview with Bloomberg, the CEO said it expects to pull off 2 or 3 deals, totaling as much as $15 billion this year, really just to replenish the pipeline after, again, the failed obesity pill. So the company's first quarter revenue also fell short of estimates, but they did maintain their 2025 outlook. So we talked about this earlier, and it's interesting that investors are choosing to focus on the positive, because sometimes they choose to focus on the negative. The company didn't give details, though, on how existing tariffs will impact their business. So that's another ambiguity right there.
Up for 4 straight days.
Well, it's pretty remarkable. I mean, I'm zooming out on the chart right now. I'm looking at its high back on December of 2021. This is, remember, at the height of the COVID pandemic, when it was one of the I don't want to say one of the two, but one of several shots that were approved, one of the 2 mRNA vaccines that were approved here in the U.S., down 54% since then.
So they've really struggled amid the declining demand for COVID vaccines. Like, I mean, who was even... Maybe some people are actually still taking those shots, but what's the next big thing for them? I mean, it can't be a one-hit wonder, and they have a series of multi-billion-dollar acquisitions, and that still really hasn't panned out.
Yeah, and the weight loss hiccup, too, that they had, especially competing with a company such as Novo Nordisk and Eli Lilly.
Yes, so we'll see what happens to them, but for now, it's looking like they might have something after that failed obesity pill, but you're right, 5 years with that time horizon, they're down 30%.
Okay, Bloomberg News cross-asset reporter Isabel Lee. And for more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Taking a look at markets right now, we're off our best levels of the day. The S&P 500 still up 0.6%, as is the NASDAQ Composite. The Dow Jones Industrial Average is higher by 0.8%. Taking a deep dive into the S&P 500 and looking at those industry groups, we see quite a bit of green in there, Emily, but still year-to-date down just about 5.4%.
I think investors are waiting for those big tech earnings that come a little bit later.
Yeah, who do we have this week? We got Meta Platforms.
Microsoft.
We got Amazon. We got Microsoft.
What's
Apple.
the other one? Apple.
Yeah.
That's right.
On Apple, you know, Howard Lutnick saying earlier that Tim Cook wants to make iPhones in the U.S. We talked to Mark Gurman yesterday. He said on the call, Mark said, I don't care about any of the numbers. I want to hear the commentary. I want to hear the Q&A because there are going to be a lot of questions about supply chains and about those tariffs. All right. That is going to do it for us on Bloomberg Business Week Daily on TV. If you're sticking with us on Bloomberg Radio, we got a great program. The close is next.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. President Trump is marking his 100th day in office by traveling to Michigan and giving automakers a break of sorts from tariffs. CBS's Stacey Lynn at the White House.
According to senior Commerce Department officials, the executive order will include offsets for automakers who finish cars in America and an exemption from stacking tariffs on parts. The relief is designed to allow all the domestic auto manufacturers to grow their plants, employment, and build more factories in the U.S.
While the Trump administration is touting its economic policies, consumers are still wary, as Kelly O'Grady of Money Watch reports.
New numbers today, consumer confidence. People are not feeling good, and that expectations index, how people feel about the next 12 months when it comes to the economy, the labor market, and their personal financial situation, has dropped to the lowest level since October 2011. And particularly in the labor market, 32% of people surveyed think that employment is going to fall over the next 6 months.
Job openings have fallen to their lowest levels since September. UPS says it's cutting 20,000 jobs globally, partly because it expects fewer Amazon shipments due to tariffs. Immigration and Customs Enforcement says it carried out more than 66,000 arrests in President Trump's first 100 days. It claims 3 out of 4 of those arrests involved unauthorized immigrants with criminal records. The Trump administration has fired the authors of a key report on how climate change is affecting the nation. Allison Keyes has that.
The last National Climate Assessment came out in 2023 and found that climate change was already transforming every region of the nation. But getting rid of the authors puts the report at risk, and an email sent to authors says the scope of the report is currently being reevaluated.
As measles cases surge, Mexico has issued a U.S. travel alert. It's reporting more cases, mostly in an area that borders Texas. Sean McKenna is a pediatrician in Richmond, Virginia, where cases have been reported now.
It's really one of the most contagious viruses we've ever been able to identify. And so if we get into situations where measles is spreading in communities, bringing it back under control becomes incredibly challenging.
Once again, much of the nation's midsection could experience severe weather. Meteorologist Grant Gilmore is tracking a massive storm system.
We've got an enhanced threat for severe weather for parts of western Pennsylvania up into New York, and it stretches all the way down into Texas.
Over 73 million people are under the threat of severe weather today. The Dow is up 331 points. This is CBS News. A British man has turned his love for gin into a spirited mission to save the world's whales. He's opened the gin library, collecting bottles, as Tina Kraus reports.
Ollie Bullock isn't just mixing drinks. He's blending passion with purpose.
With the largest gin bar collection in the world, with over 2,000 bottles.
His gin library is tucked away on a Portuguese island in the Atlantic. For each craft gin he produces, up to $20 goes to help save whales in the region. Another $5 is thrown in for guests who stay at the library's eco-friendly hotel. Tina Kraus, CBS News, London.
Social media giant Meta has unveiled its first standalone AI assistant app. CEO Mark Zuckerberg said in an Instagram post that 1 billion people are using Meta AI across the apps, so they made a standalone for everyone to check out. He's designed to be your personal AI assistant. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily on this Tuesday, April 29th, 2025. I'm Tim Stenivek, along with Bloomberg News cross-asset reporter Emily Grafeo in for Carol Massar this afternoon. Emily, we're seeing some buying of U.S. equities today, but we are off our best levels of the day.
People are also buying Bitcoin, Tim.
What?
I mean, look at this, 95,000. There's been a lot of volatility. There's been a lot of headlines, but at least from the analyst notes on my desk, the general feel is that in the short term, it's risk on.
Okay. That's so interesting because on Bloomberg Crypto earlier, for the last couple of weeks, we've been talking about this idea as Bitcoin as a safe haven. It's even in this month, it's outperformed gold, which is up about 6%. It's outperformed stocks, which are pretty much flat since so-called Liberation Day. It is like the outperformer. So there's this conversation happening or debate happening about whether it is indeed a safe haven. We're not talking about that today, though.
We're not talking about that, no. But, you know, it was just an aside, just a note on
it's
markets,
a perfect
Tim.
aside. It's a perfect aside. Hey, something we are talking about are trains, planes, and automobiles. What is up with UPS and Amazon? We're going to get the latest from Lee Klaskow over at Bloomberg Intelligence.
And inside the upheaval at 60 Minutes, we'll get that with Lucas Shaw.
Also, earnings after the bell today, Starbucks, Booking, Visa, Snap, and more. All that and more coming up over the next 2 hours right here on Bloomberg Business Week Daily. First up, a check on the day's trade and top business stories. Here he is, Charlie Pellet.
Hi, thank you very much. Indeed, 53 minutes to go until that closing bell clangs on Wall Street. With the Dow, the S&P, NASDAQ all pushing higher right now. We are on track for our 6th day of gains on the S&P 500 index, up 33 points right now, up by about 0.6%. The Dow up 337, up 0.8%. NASDAQ right now up 99, a gain there of 0.6%. The 10-year 4.16%, with the 2-year 3.64%. Gold now down 0.6%, 33.24 the ounce. West Texas Intermediate crude down 2.8%, 60.40. Emily mentioning Bitcoin up now by 1%, 95,453 on Bitcoin. Sizing up President Trump's first 100 days. Goldman Sachs CEO David Solomon told us investors are craving certainty.
Even if we have a slower economy, or even far worse, we have a recession, ultimately, when the market adjusts to that and resets, people need to transact, they need to raise capital, they need liquidity for their investments. And so part of this is just a reset of expectations, and we're in the process of that happening.
Goldman CEO David Solomon speaking with our Francine Lacroix. General Motors withdrawing its earnings guidance for 2025 and putting $4 billion in share buybacks on hold due to uncertainty around U.S. tariffs. On an update for the rest of the market, General Motors down now by 1.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. Do appreciate it. I'm looking at shares of UPS right now. The company did report earnings early this morning, bouncing around quite a bit today. Right now, down about 0.5 percentage point. In the news, the company does expect to cut 20,000 jobs this year and close dozens of facilities as it dramatically reduces shipments for Amazon and e-commerce. Well, Amazon's e-commerce, I should say. UPS earnings per share came in above analyst estimates, though the company did back away from its full-year financial outlook, saying it wasn't giving an update, quote, given the current macroeconomic uncertainty. For more, we bring in Lee Klaskow. He's Bloomberg Intelligence Senior Transport, Logistics, and Shipping Analyst. He joins us from Bloomberg Intelligence headquarters in Princeton, New Jersey. Lee is also the host of the Talking Transports weekly podcast from Bloomberg Intelligence. You can get that at Bloomberg.com or wherever you get your podcasts. Lee, I want to start less with the numbers that we got from UPS in terms of the top and the bottom line and focus on this 20,000 jobs and the dozens of facilities that it's going to close. We knew that there was this relationship with Amazon that was sort of, I don't want to say breaking up, but that was kind of on the rocks here. Did we learn anything new with these numbers today?
I just think we learned a little bit about maybe the pace of when UPS is going to reduce its overall exposure to Amazon. And, you know, they said that, which they've said before, by June of next year, they plan to have about 50% less of Amazon's business than they did today. And, you know, that's going to ramp up over time. They expect around volumes from Amazon to decline around 16% in the first half of this year. That accelerate to 30% in the second half, and then obviously move even higher in the first half of 2026. And the reason why they're doing it is, you know, the business just didn't make sense for UPS. It wasn't a good margin business. The ROI wasn't there. And so, you know, what UPS has decided to do is really focus on its network and do what's best for its network. And so it's not only laying off people, because obviously if you're doing a lot less business with your largest customer, you need less people. Also, they're going through a transformation of increasing the automation of their overall network, which is also reducing the need for people. So, you know, they said they're going to reduce the number of employees by around 20,000. They're around 490,000 globally. So, it is, call it roughly like 5% of their workforce that they're looking to lay off over time.
So, Lee, I know Tim said that he knew about the relationship between UPS and Amazon, and that he said you also knew about it. But excuse my ignorance, I did not know that much about the history. So maybe just very quickly, you could give us the quick background on, is this Amazon related, or it's more UPS related that this relationship is now breaking up?
Yeah, this is more UPS related. I'm sure Amazon would like to have a carrier like UPS to deliver their goods at very low prices, and that's kind of what UPS has been doing. UPS will still do some of their more profitable moves, specifically returns. Returns are very good business for UPS and FedEx. FedEx used to deliver a lot of Amazon packages, but they, a couple of years ago, decided to step away from that business too. So, this is not unprecedented, and it's just really allowing UPS to free up their network to be able to create capacity to take higher margin business from small to mid-sized shippers over time. Obviously that might be at risk nearer term just because of the uncertainty around tariffs and what that might do to volumes.
Well, let's talk a little bit about that, because you and the team at Bloomberg Intelligence out with a new note, Lee, that says the U.S.'s more protectionist policies have put a wrench in UPS's outlook as the company must navigate increased demand uncertainty, which also may raise execution risk of its network transformation. What do you expect to happen in this environment, with the caveat that, look, uncertainty is the key word here. Nobody knows what's happening, but also that UPS and FedEx, another company that you cover, these are kind of seen as bellwethers when it comes to how the economy is doing.
Yeah, UPS's management team on this morning's on their earnings call, they alluded to the fact that they're seeing a lot of their customers just working, beginning to think about working through their inventories rather than being going out there and buying new things. We've seen the number of bookings out of China to the U.S. on liner ships down 30 to 40%. So you're definitely seeing a slowdown in demand. And some of that slowdown is due to the fact that there was a pull forward effect ahead of the tariffs. And so, you're definitely going to see a slowdown. And for the UPSs and the FedExes of the world, getting rid of the de minimis exemptions, which will happen here in early May, will also have an impact on volumes as well.
Lee, what do you make about the company's decision to not update its annual forecast? Is there any signal that we can get in terms of the health of the company UPS, or is that just something that we're seeing basically every company do this earnings season?
Well, actually, surprising in my space, in planes, trains, and automobiles and trucks, a lot of the freight providers have maintained their guidance, which is pretty interesting. I think what UPS is doing is probably the right move, because at the end of the day, no one knows what demand's going to be, because the tariffs have increased the amount of uncertainty that's going on in the marketplace, and shippers really can't plan at all for their businesses. And so a lot of them are just taking a wait-and-see approach. And if you're the grease that moves commerce, which is what UPS and FedEx and other freight providers, what they do are, you're definitely impacted by this paralysis that we're seeing in the supply chains. And oh, by the way, happy Supply Chain Day.
Oh, I didn't know.
Supply Chain Day.
What are we supposed to do for Supply Chain Day?
I do not know, but I just read about that earlier this morning. So I just wanted to wish everyone out there a happy Supply Chain Day.
Well, thank you. I can tell you're the first person ever to do that. So I think that's very kind of you, and I appreciate it. I love this, Lee. I love this. Hey, you really got me thinking about Amazon and Amazon's own supply chain. I promised we'd talk planes, trains, and automobiles as we do with you. It used to be this uncommon sight that you'd be on 95, here in the Northeast, and you'd see an Amazon semi-tractor trailer. Like, that used to be a thing. Now you see them just as often as you see those from Walmart, or perhaps even more. It used to be kind of like interesting when you were at an airport to see a Prime Air plane. That's no longer interesting. That happens. It used to be notable for me to see a Rivian delivery van that is Amazon branded in my neighborhood. That's just a daily occurrence now. Lee, what portion of Amazon's own logistics network does it have under its Amazon brand right now?
Well, a lot of these, trucks and delivery cars that you're talking about actually aren't owned by Amazon. They're third-party providers. I mean, they outsource a lot of this. So, you know, they use owner-operators in the truckload market. They use what they call DSPs to do the final delivery. It's kind of like a similar model that FedEx has, where UPS is different, where they're owner and operated. But, you know, UPS is doing more and more, trying to take more of their deliveries in-house. And the reason why they're doing that is they're trying to not only control costs, but also control the service that they're able to provide.
Lee, we only have less than a minute left, but you had mentioned that the company is looking to more profitable business lines. What are some of those?
Right?
UPS, yes, not Amazon. UPS.
Well, so there's a couple avenues. So the healthcare industry is one. You know, UPS, FedEx, and others are really getting aggressive in getting into or building those businesses. UPS wants to double that business and make it a $20 billion business for them in a couple of years. And, you know, what they're doing that is through acquisitions. They actually just announced an acquisition, I think late last week or early this week. The days are kind of blending in with earnings season. But, you know, they just announced a deal recently, and we expect more deals to come. And they're also focused on the smaller to mid-size shipper, which just tends to have better margin business.
All right, Lee, you're going to have to leave it there. Really appreciate you joining us. Lee Klaskow, Bloomberg Intelligence, Senior Transport Logistics and Shipping Analyst. He's the host of the Talking Transport's weekly podcast from Bloomberg Intelligence. Get it wherever you get your podcasts. And Emily, our first supply chain day. We did it.
We're going to have to celebrate
after this.
after
Yeah, we're going to have to celebrate. We will. Hey, we're going to talk to Lucas Shaw in just a few minutes. He's standing by. He's got everything that's happening over at 60 Minutes. That's next on Bloomberg Business Week.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are higher, and this Bloomberg Business Flash is brought to you by ShipStation. Calm the chaos with the shipping software that delivers. Use code Bloomberg for a free trial at ShipStation.com. That's ShipStation.com with the code Bloomberg. The Dow, the S&P, NASDAQ all advancing. 38 minutes to go now ahead of the closing bell. S&P 500 set for its best winning run since March of 2022. We have got the S&P on track for its sixth day of gains, up 35 right now at 55.64, up by about 0.6%. The Dow up 362, up 0.9. NASDAQ higher by 104, up by 0.6%. The 10-year 4.16%, with the 2-year 3.65%. Gold now down $6 the ounce, 33.22, and West Texas Intermediate crude down 2.8%, 60.28. Bitcoin up 1% right now, 95,454. So right now, U.S. stocks are pushing higher. As for the overall market backdrop, Anastasia Amoroso is chief investment strategist at iCapital. She was interviewed this morning on Bloomberg The Open.
If you zoom out from the day-to-day or the intraday market volatility, I do think you have a more constructive setup right now where technicals have corrected, and at the same time where I do think we've seen peak tariffs, and there's likely a path lower from here.
Anastasia Amoroso of iCapital. Royal Caribbean Cruises raising its profit outlook. Shares of RCL up now by 0.5%. Rival Carnival Corp is lower by 0.8%. Norwegian Cruise Line Holdings down by 0.5%. JetBlue Airways, the latest U.S. carrier to pull its full-year financial outlook. JetBlue shares today, they are advancing. JetBlue shares right now up by 3.5%. And Hilton Worldwide Holdings lowering its earnings forecast for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that, Charlie. Do appreciate it. By now, many of you have seen or heard or watched what Scott Pelley said on 60 Minutes on Sunday evening. It was in reference to longtime executive producer Bill Owens announcing to his staff last week that he's leaving, citing corporate interference at the most watched TV news program in the U.S. Here's what he said, quote, "Paramount began to supervise our content in new ways. None of our stories has been blocked, but Bill felt he lost his independence that honest journalism requires, the independence that honest journalism requires. No one here is happy about it." Joining us now with an inside look at everything happening at 60 Minutes is Lucas Shaw, managing editor for Media and Entertainment. He joins us from Los Angeles. Lucas, I feel like everything at this point is political, but truly, this story is political. What's going on here?
Well, it's all tied up into the ongoing saga at Paramount Global, which has been in talks to sell itself for 18 months. But Scott Pelley's comments and the resignation of, or I should say the departure of Bill Owens, because he didn't technically resign, I think is the result of, or the culmination really of months of tension between Sherry Redstone, who is the chairperson of Paramount Global, whose family controls the company, and her news division. And that started with frustrations related to kind of Gaza coverage, because Sherry is very passionate about the state of Israel. That started on CBS This Morning, continued on 60 Minutes. And then as she realized that Donald Trump's suit against 60 Minutes, which was related to the editing of a Kamala Harris interview, might jeopardize the sale of the company, it just escalated. And so you've seen her both publicly and privately clashing with that news division, ultimately leading in the news of the last week.
Lucas, tell us what your reporting has shown about those public and private clashes, and just how unprecedented this is to see the chair of a parent company of a news organization intervene in coverage like this.
Well, there was a CBS This Morning segment in late September, I believe, might have been early October, but right around there, where they interviewed Ta-Nehisi Coates, who is the author of a new book called The Message, and a particular anchor, Tony Dockapil, was kind of aggressive, shall we say, in talking to and questioning Ta-Nehisi. The news division ended up scolding him, and then Sherry Redstone came out publicly and said that they made a mistake in doing so, and she didn't think that his questions were over the line. in January, 60 Minutes did a piece on members of the State Department resigning in protest because of the kind of U.S.'s support for Israel and some of the violence in Gaza. She didn't like that piece, and that was when she started sort of privately saying maybe we should make a change at 60 Minutes. And it's really it's continued from there. I mean, you asked unprecedented. I don't know that it's unprecedented. I mean, people who own news companies tend to like to influence what their news outlets say. Now, some of that is just in the opinion, some of it's not. You know, we had John Malone, who was one of the largest shareholders in Warner Brothers Discovery, talk, I think, pretty openly after he helped orchestrate the merger of Time Warner and Discovery about how CNN had maybe tilted a little too far to the left. So it's sort of an evergreen topic, but people do seem particularly perturbed in this case, partially because 60 Minutes is such a storied brand and has operated with a tremendous amount of independence over the years, and partially because most people think that Trump's suits against 60 Minutes is completely meritless.
Hey, Lucas, there's a lot of directions I want to go here, but I want to know about 60 Minutes and the future of 60 Minutes without longtime executive producer Bill Owens. And with Scott Pelley making these comments on Sunday night, I mean, is this, in your view, going to be a news program that will continue to have the influence that it's had over the last few years, many years?
I think so. Yeah. I mean, look, I view what Bill Owens and Scott Pelley have done as more warning signals. There's nothing that has changed about the programming of the show, right? Even though Sherry Redstone wanted to know about upcoming stories about Trump, they did a piece on Trump on Sunday, right? They're not changing their programming. Now, will this be different in the new regime? Are they going to hire some new producer of 60 Minutes who is more pliant as part of getting their deal approved by the FCC? Are they going to eliminate some of the journalistic independence that it has enjoyed? Those are possible. None of that's happened yet. So I think what you're seeing is a lot of news people concerned about what could happen. And so it's very hard for me to project out what it will, because at the moment, I think the brand of 60 Minutes is fine, and the average person has no idea that any of this is happening.
It's a good point.
Lucas, just quickly, what did the 60 Minutes employees have to say about Bill's departure?
I mean, they're all spooked and very sad. You know, we spoke with one of them on the record, many of them off the record or on background, and yeah, they're you know, they all revere Bill as a journalist. And kind of stand behind him and don't like this idea that their owner is meddling in what they're trying to do. I think, you know, 60 Minutes has, as I said earlier, has long had a really strong degree of independence, and that has meant sort of ignoring what their owners and bosses want to say. And this notion that anyone is trying to take that away from them, you know, is frightening and concerning to them.
All right, Lucas, going to leave it there. I know you got to run. We appreciate you joining us today. That's Lucas Shaw, Managing Editor, Media and Entertainment for Bloomberg News, joining us out there in Los Angeles. Well, as we mentioned, stocks higher on this Tuesday afternoon. Still up, but off their best levels of the day. The S&P 500 up 0.6%. We could be on pace to see the S&P 500 have its best 6-day streak going all the way back to March of 2022. The S&P 500 up more than 7% just in the last 6 days. Joining us now is Eric Weiner. He's Bloomberg News Senior Editor, Equities America. He's here in our Bloomberg Interactive Brokers studio. Why is everybody buying?
There's a bias to the upside, and it's sort of like what we were talking about yesterday when I mentioned JP Morgan's trading desk talking about how there's this sense that although things will come unglued, like there's this cloud on the horizon, it's pretty far off. So you have, say, 2 months before anything really is going to show up in data. We paused tariffs for another 75 days, and he could pause again. So right now, if you're a portfolio manager and things are rising, you need to buy into this, even if you see things coming, because it's all about timing. So it's like you're looking at a cloud and you have a game going on, and you're saying, okay, that storm is coming in 4 hours. We can get this game in 2.
I love this.
And
Finally,
that's where we are. That's where we are. We're looking at the cloud and we're saying we can get the game in.
What's that cloud? Sorry, Emily.
Well, the cloud is everything. Okay. I mean, the cloud is the.
It's hail. It's sleet. It's snow. It's rain.
Exactly. It's the 10 plagues. No, but it really is the idea of the economy coming unglued and it's showing up in earnings, because we have not gotten outlooks that really are definable. So the companies that are affected by tariffs right now are simply saying we don't know. So you have to guess. And when there's this upward trajectory in the market, you buy, but that does not mean that over the long term you are looking at company X and saying, okay, this company is going to do well, because we really don't know. We just know that we just have a sense that they're going to survive the next couple of months, but eventually this will show up in earnings, and that's when individual stocks start getting hit.
What about for tech earnings this week? Because Bloomberg News is Tech Watch. The headline is Big Tech's earnings problem is estimates may be way too high. That kind of sounds like a cloud.
Okay, so on that story, that is actually true and scary in that they could miss. However, the question is how much traders are actually looking at the current results versus the forward results. And it's the same kind of thing. So now tomorrow, this is all going to kick off, and we'll start hearing about, what people think about Microsoft and all the other companies, Apple, that are reporting. But at the same time, what we're talking about is what their outlooks are. So it's what's your supply chain going to look like? How hard is it going to be for you to build iPhones or chips or whatever it is? And what they're going to say is we don't know. And as long as they say we don't know, you can put on it whatever you think. And that enables you to keep buying. Because if they were to say things are going to look bad, then, and that will eventually come. They will eventually have certainty of where they are. Right now, all we have is reports of ships staying in China and, threats of either empty shelves or higher prices, but nothing concrete is happening. So that's where people are.
We only have about 10 or 15 seconds left, but if we are, can you continue with that weather metaphor? How far away is it?
I would say 2 to 3 months.
Okay. It's interesting that we're hearing more uncertainty from companies and less of the idea of this is going to be bad. We haven't heard that really from companies. No. And the other thing is they don't want to scare everybody. Yeah. Hey, well, we appreciate you joining us and giving us that.
Giving us the
analysis.
weather report.
I like that. I was going to say that. That's perfect. The weather report. Eric Weiner is Bloomberg News senior editor of Equities America. Is taking a look at the S&P 500 in the green right now, up close to 0.7%. The Dow up 0.9%. Coming up next, we're driving to the close with Michael Green over at Simplify Asset Management. It's Bloomberg Business Week Daily.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. 20 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ 100 index all advancing right now. Let's head over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Shai. That's right. U.S. stocks trading in the green right now with the Dow currently up 350 points. S&Ps are higher by 33 and NASDAQ rises by 0.5%. The U.S. 10-year yield falls to 4.17%. Gold and oil are in the red, but Bitcoin, that's higher by 1%. Among the main 11 S&P sectors, leaders were materials and real estate. Only energy was in the red, and leaders to the upside in the Dow after earnings. Sherwin-Williams and Honeywell, while UNH fell 2% and led to the downside. Also after earnings, Pfizer rose 4%, Regeneron fell 8%, and among the financials, Wells Fargo is buying back $40 billion in stock. Regarding the tariffs, the FT reported that Trump to unveil more tariff relief during his trip to Michigan today. And wrapping things up, some of the names pointing up to the bell tonight include Visa and Starbucks. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg-type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
It is Bloomberg Business Week. We just got an update from Bill Maloney and Charlie Pellet. The S&P 500 up 0.6%, but off its best levels of the day, up more than, Emily, what is it, 7.5% in the last 6 days?
It's been a run of risk on. As Eric Weiner said, at least in the short term, investors are riding the momentum upwards, even if there are risks building in the background that maybe will come to fruition later on once we get more certainty about tariffs.
Well, curious about some of those risks that Michael Green has his eyes on. He's portfolio manager over at Simplify Asset Management. He joins us out there in California. Hey, Michael, you've got an interesting note that you sent to our producers ahead of this conversation, and it makes me think of something that Emily brought up earlier, and that's alternative data, because you're saying that real-time indicators of business activity like trucking are slowing rapidly. What are you seeing out there?
Well, that's absolutely what we are seeing. We are seeing forward-looking metrics, things like rail car bookings, things like trucking indicators. Those are weakening very rapidly. We're already seeing ports slowing down in particular Los Angeles, which is going to be the first to feel the impact associated with the Chinese tariffs. That's the first destination that you hit. It takes longer to get to the East Coast locations. We're absolutely seeing something that looks very similar to the initial COVID shutdown, in which basically activity just came to a grinding halt. The key difference this time around is, unlike the COVID events in which we knew that going outside and being in physical proximity to other people meant that we were potentially putting our lives at risk, we're not seeing that type of slowdown of economic activity. It's just this slow rumbling boil that's effectively occurring underneath the surface that is painfully apparent. It's a little bit more like the stage of COVID where we were watching the events in Italy or in China and beginning to think, is this possibly going to make it here?
So how do you square that kind of like bubbling of alternative data that looks concerning with the fact that, as Tim had mentioned, the S&P 500 is up something like 7% over the last just few days here? We really have had a risk-on moment. Does that all make sense in the context of what the data is telling you?
Well, it doesn't make sense in the context of what that data is telling us, but it makes perfect sense in the context of another alternate data set, which is just the very simple observation that very few people have lost their jobs yet. And so if this economic slowdown persists, if we do see the impact of this carry through, we are likely to see that show up as job losses. But for the past 5 years, most businesses have struggled to attract and retain qualified employees. That means that if something like tariffs that could be removed with a tweet or a speech are revoked, they're terrified that they're going to wake up and suddenly find that they are back behind the 8 ball and they are faced with not enough employees to meet the potential rebound in the economy that could occur. That's causing basically companies and their planning departments to freeze and say, well, let's try to reduce hours a little bit. We saw clear evidence of that in the Dallas Fed manufacturing survey, I think it was yesterday, in which we're seeing the expectation for hours begin to fall. If this persists, if it does actually manifest, and again, unlike the COVID experience, this time there's not the sense of national emergency. There's not the sense that this is a unifying event. Instead, this very much feels like it's a fracturing event where half the population is saying, I told you so, and the other half of the population is saying, well, we had to do this. Under these conditions, we're looking at a situation where that stimulus is likely to arrive much later, and only after we've begun to see the impact of it. If people start to lose their jobs, then their contributions to 401ks begin to decline. Then their contributions to their IRAs begin to decline. Then they begin to tap into their 401ks or IRAs for additional spending power. We're starting to see the first elements of that, but it really has not hit in a meaningful fashion yet. And this is one of the paradoxes of a passive dominated world. All that matters is, do people have jobs and are they contributing to their 401ks? The answer so far is yes.
And yet, I'm seeing over the last 7 days, the S&P 500 up 5.2% over the last 7 trading sessions.
Yeah, well, the simple answer is that people still have their jobs. They're still contributing to their 401ks. And anyone who is trying to trade in advance of this has already sold, right? We've seen the de-risking from Europe. We've seen the de-risking from systematic strategies like CTAs or vol targeting funds. We've seen the active managers move to rapidly de-risk their portfolios. This is particularly true in the hedge fund community. Once they've sold, they've got nothing left to sell. So the pressure on the market then becomes upwards.
Mike, have you made any recent portfolio changes in light of the tariffs post-Liberation Day? Have you added any specific hedges or taken risk off the table?
Well, we were fortunate in being positioned for this. So we actually saw this as a COVID-like event that was unlikely to lead to a slow and gradual decline. Instead, it was likely to manifest itself very much on the event. And so we were fortunate in the high yield fund that I run that carries credit hedge protection to have positioned ourselves well ahead of this event. That allowed us during the event to actually re-risk. And now we're in the process again of putting back on hedges, positioning ourselves for what we think will be the second leg down on this. Now, that could be wrong, right? We could see a reversal of tariff policy, but it does very much feel like significant damage has been done, and that will ultimately have to be reflected in the flow dynamics that I was referring to before. As I start to add back hedges, I'm sure other people are doing something similar, whether they are re-risking and contributing to that rally, or whether they are taking this opportunity to add back hedges is their individual choice. But the simple reality is that we've seen much of that impact already. And so I'm looking to actually reduce risk as the month comes to a close.
I have to ask about Bitcoin because it's doing so well over the last few days. It's up 95,000 now. Is that a hedge that people are using? Are people using Bitcoin now as a safe haven?
Well, that certainly is the dialogue, right? That's the narrative associated with Bitcoin. The reality of Bitcoin is the same reality that exists for any financial asset. If people buy it, you have to find people willing to sell it. If they are less willing to sell it, the price will move higher. That is what we are seeing with Bitcoin. Just like we've seen a return to buying of stocks once the selling was done, we largely have seen a reversal of the outward flows in Bitcoin. We've seen positive inflows into the ETFs and other avenues in which people buy it. And that obviously creates a self-fulfilling mechanism, right? We're on the radio talking about, is Bitcoin a flight to safety instrument? I'm sure somebody out there is suddenly now looking at the screen and saying, gosh, it might be. Maybe I should buy some Bitcoin. If it were to start to fall, that process would likely reverse itself and you would see the flows reverse and ultimately the price would fall to reflect that. Bitcoin is just a fantastic illustration of the inelasticity in markets that I often highlight in my writings and in my speeches.
Hey, we appreciate you taking the time to join us today. We got to have you back soon. Michael Green, he's portfolio manager over at Simplify Asset Management. Speaking of the markets, on the equity side, we got about 10 minutes to go until the close. Stocks pretty much near their session high, up 0.7% on the S&P 500. Coming up next, our cross-platform coverage.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week Daily. That is Emily Grafeo of the Bloomberg News Cross Asset team. She is in for Carol Masser on this afternoon. We got a lot of stocks, or companies, I should say, reporting. We're going to be watching the stocks after the bell. Emily, Booking Holdings, Caesars Entertainment, Mondelez, First Solar, Visa, Edison International, Starbucks, Frontier Communications, and Snap.
So I don't think I remembered all those names that you said, but a lot of them.
Well, I just read them off the chat that Finley posted, so I cheated.
They all sound, or at least many of them sound like we'll get a read on the health of the consumer.
Yes, that is absolutely true.
Are people booking
Mondelez,
travel?
Starbucks.
Are people eating cookies?
Yes. yes, and yes. Are people buying coffees? What's going on with Brian Nickel at Starbucks? Is he Chipotle-fying Starbucks?
The Starbucks?
Yeah.
I gotta admit, I haven't been in a Starbucks in a while.
Neither have I.
So we'll have to trust
Charlie
these
Pellet, huge start every day to
Really?
Starbucks. Yeah, every day.
As a Bloomberg employee, we get the best coffee in our
really good
office.
coffee in the office, and he still goes.
And he's still,
I know.
wow.
I don't know why he does it. We'll get an explanation from him, perhaps. Hey, there are some stories on the most read that are really piquing my interest right now. I want to start with this one from Harvard, this crossing during our program this afternoon. Janet Lauren writing about how Harvard has released its long-awaited reports on anti-Semitism and anti-Muslim bias, presenting a scathing critique of how its students treated each other in the aftermath of the Hamas attack against Israel on October 7th, 2023.
President Alan Garber said in a letter Tuesday, "I'm sorry for the moments when we failed to meet the high expectations we rightfully set for our community. And this letter also offered recommendations for the university covering admissions, handling complaints, and how it teaches. I'm sure that admissions office did get a number of complaints after, of course, all of the upheaval on college campuses.
Yeah, the federal government slammed Harvard over anti-Semitism after the October 7th attacks. The critique, though, under the Trump administration has really morphed into an attack on the university's governance, its promotion of diversity programs, and its perceived liberal bias. On Monday, the government opened another investigation alleging discrimination, this time at the Harvard Law Review.
So, Tim, this is Harvard, you're saying maybe bowing to the administration now, trying to
I don't know.
Cover their tracks?
I think that they're an example of a university that has come out forcefully against
Yeah.
what the administration wants. You could, we could speak to Janet Lauren about this, who has really been reporting on higher ed finance and over the last couple of years on everything happening on college campuses. But I think it's welcome news, not just the administration, but many observers who say that they do perceive this liberal bias on this campus. But Harvard has made clear, I think, that it is not going to give in to the demands of the Trump administration.
Yeah. There's another story out. It's not about colleges. It's about the CIA.
Oh.
And it's by Gregory Corte. Is that how you
Gregory
say it?
Corte.
Gregory Corte
Yeah.
of Bloomberg News. The CIA won't acknowledge whether it runs a secret Northern Virginia complex that appeared briefly on a list of, quote, non-core federal properties that the Trump admin tried to sell.
I'm just reading
last
ahead.
month.
I'm just
Yes,
reading ahead of the
please,
story.
Please.
This is hilarious.
Yeah. This sounds like when you accuse like a partner of like watching a TV show before you do. Go ahead.
Like cheating on Netflix is what you're saying? Okay,
yes.
Netflix cheating. Quote, the CIA can neither confirm nor deny the existence or non-existence of records related to the sale, the agency said in response to a Freedom of Information Act request about the proposed sale of the Par Franconia warehouse complex, which is a reputed CIA facility. The spy agency frequently uses such language called a Glomer response after the secret 1974 operation to recover a Russian submarine to avoid having to say whether classified records exist.
Yeah, I mean, what are we supposed to glean from this? We can't confirm or deny the existence or non-existence. Great. We learned so much.
All right. Well, Bloomberg News did request records related to the buildings after the GSA put them on a list of properties the Trump administration was considering for sale. Hey, we're going to be joined by our Bloomberg TV team for our cross-platform coverage. The closing bell, it starts right now.
Sequential earnings after the bell, including from Mondelez, Starbucks, Booking, and Corvo. Full market coverage, that begins right now.
The closing bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele, taking you through that closing bell. It's a global simulcast, and it starts now. Scarlett Fu in the TV studio, Tim Stenovic in the radio booth. Carol Master has the day off. Emily Grafeo filling her shoes for the day as we welcome our audiences across all of our Bloomberg platforms. Tim Stenovic, 6 straight days of gains for the S&P 500. A pretty decent rally over those 6 days into what's about to be a fire hose of earnings over the next 3 days.
Yeah, the question is, do the earnings that we get over the next few days change the tune? Because we have seen a lot of buying, Emily, over the last 6 days. The S&P 500 up close to 8% just in that period of time.
Yeah, I mean, the word on the street, at least if you look at what JP Morgan's trading desk is saying, is that the near-term momentum is risk on. The direction of travel is up. No matter what happens later, at least for right now, there's green on the screen.
And it's also worth noting that at least for today, the indexes hit their intraday highs when there's some comments from Trump surrogates, Howard Lutnick, Stephen Miller, suggesting that deals are closer to getting done. And that's certainly helping to support sentiment, at least.
And at least we heard from the White House as well that an executive order that Trump signed tackles the cumulative effect of overlapping duty on cars, which goes to the point that Jay Woods was just making on air with us, that maybe that bottom is actually in. But now, what is that top that we need to be looking for?
Yeah, and that's the question, though, too, right? I mean, it's easy to sort of look at the big gains that this market has made just over the past few days and really the last few weeks here. But, of course, you have to remember the starting point of where we were at the beginning of this year, or at least at the beginning of this administration. Still a lot of room to go. in order to claw some of that back. We should point out, over this 6-day stretch, you are looking at an S&P 500 that's actually up 8%. That includes 8%. That includes a gain of 0.6% here on the day. It's going to close out right around 55.60. The NASDAQ composite up about 10% over that stretch, is up 95 points today, or 0.6%. The Dow Jones Industrial Average adding 300 points, or 0.8% here on the day. And the Russell 2000 getting in on the action with a gain of 0.6%.
All right, well, the gain's pretty broad-based. 3 stocks higher for every 1 stock that was lower in the S&P 500. 370 to the upside, 133 remain to the downside.
All right, let's get to Qorvo, a maker of special components that go into smartphones and other devices. The company reporting revenue for its fiscal fourth quarter, adjusted revenue of $469.5 million. That does appear to be a beat. The street on average was looking for roughly $851 million. Adjusted EPS also a beat, $1.42. The street on average was looking for 99 cents a share. Not really seeing any guidance jump out at me at the moment here, but you are seeing a slight move in the shares higher, up 5% in the after-hours trade.
All right, and let's also get a read on travel here from online booking company Booking, reporting first quarter revenue beating analyst estimates, $4.76 billion, higher than what was anticipated, which was just under $4.6 billion. Gross bookings also beating analyst estimates at $46.7 billion. First quarter room nights sold 319 million, better than the expected 316.6 million. And first quarter adjusted EBITDA also topping the $1 billion mark, $1.09 billion. Analysts were looking for 849 million. So that stock right now marginally higher in after-hours trading by about 0.25%.
All right, taking a look at Caesars Entertainment. So for the first quarter, they had a loss about 54 cents a share on net revenue for the first quarter, about $2.8 billion. And their same-store adjusted EBITDA came in stronger than estimated, and their same-store net revenue sales came in bang in line with estimates. Remember, they had a tough comp period because of the Super Bowl in Vegas last year. They do point out that 2025 free cash flow will show significant improvement.
Yeah, also going to be listening on that call for any commentary about what's going on in Las Vegas. We've seen some anecdotal reports of decline in visitors to Las Vegas. In the meantime, I'm watching First Solar and seeing what's going on with First Solar. First quarter adjusted earnings per share coming in way below estimates, $1.95. Estimates were for $2.48. The first quarter EPS missing estimates. The operating income coming in below estimates as well. First quarter net sales coming in shy of estimates. Shares down 6.66%, Emily.
All right, Tim, I'm looking at Trivago. The first quarter coming in at a loss per share. The first quarter revenue also looking just actually beat estimates here, 1.24.1 million euro versus estimates of 110.7. That's all we're getting from Trivago right now.
Kind of interesting, too, when we talk about the sort of the consumer spending, and you take a look what we're learning out of Booking, what we're going to learn, what we're learning out of Caesars, and then you take a look at Trivago, and then you overlay that with what we learned earlier today out of Royal Caribbean. It's kind of interesting to see that this might not necessarily be the type of economy and the type of read on consumer spending that is going to be sort of cohesive and all as one. You're going to see layers, and you're going to see pockets of that, and I think that's reflected in the numbers that we're getting here in the after-hours trade.
And to that point, companies are really making a point of buying back their stock, also increasing their dividend or making sure that they stay current on their dividend as a way, because that's a way that they control the variables that are within their control, right? Because the macro environment is all kind of beyond them, but what you can do is manage your cash and return cash to shareholders. And the case of Booking, for instance, declaring a cash dividend of $9.60 a share, and also talking about their stock buyback program as well.
Let's go back to First Solar for a moment, guys, because that stock's down 14%. Their updated outlook reflects expected tariff impact. Remember, you have a tariff impact from solar imports. That's going to affect the guts and stuff of what we do to build solar panels. They look at their full-year operating expense at the high end, about $510 million. Now, the CEO in the earnings release says that despite near-term challenges presented by this new tariff regime, they believe the long-term outlook for solar demand in the U.S., particularly in that core market, remains strong.
We also are getting some breaking news coming from the healthcare space. United Health names Patrick Conway, the CEO of Optum. United's Heather Cianfrocco is taking a new EVP. This is coming from an 8K that was just filed. I'm looking at shares of United Healthcare at the after hours right now, and they are unchanged in the after hours. But once again, United Health naming Patrick Conway as the chief executive of its Optum group.
You know, I'm really looking at that booking number and just wondering how much of a read we can really get here on the macro environment, particularly because these results are backward looking. I mean, this is the first quarter. This is really coming before all of the headlines, and we could call it, you know, uncertainty about tariffs here. We'll see how that weighs on the guidance.
Well, one company, of course, that could really be affected by this is Starbucks. So shares moving lower in the after-hours trade. The earnings crossing the wire right now. The company's saying that in its most recent quarter, the fiscal second quarter net revenue came in at $8.8 million. That's basically on the nose. The street was looking for $8.83 billion, if we want to be precise about it. Comp sales overall did drop, down 1%. The street was expecting a drop of about 0.6%, so slightly worse than what the street was looking for. U.S. comp sales, that was decidedly worse, down 2% in the quarter. The street was looking for a drop of only about 0.25% on the quarter, so a big miss there. Adjusted EPS also missed, 41 cents a share. The street was looking for 49 cents a share. I'm still looking for some guidance here, but the company basically, for all of the major units that it has, certainly here on the U.S. side, it does appear to be a miss, including in North America. The one bright spot does actually appear to be international sales. Those comp sales actually rose unexpectedly 2%.
All right, let me jump in here with Mondelez, the packaged food company, seen as more defensive in these kind of uncertain times, reporting first quarter adjusted EPS of 74 cents. The overall headline number for EPS was 31 cents. Net revenue coming in just a little bit shy of analyst estimates. You could call it even. First quarter net revenue of $9.31 billion. And in terms of its outlook, it sees full year organic net revenue of about growth of 5%. Analysts were looking for just about 4.9%. So that's slightly better than what analysts had been anticipating. You're looking at the stock moving slightly higher right now, up about 1/3%.
Just want to hit quickly on Edison International. Operating revenue for the first quarter came in light, even though core EPS actually beat. The Eaton fire investigation is continuing. The company says it's working close with state and county leaders. We will have the CEO on tomorrow at 3:10, Pedro Pizarro, CEO of Edison International.
Well, Visa shares spiked, and then they've come back to earth a little bit in the after hours, just up about 0.5 percentage point. The company has authorized a new $30 billion share buyback program. In terms of numbers that the company reported, second quarter net revenue coming in above estimates at $9.59 billion. Second quarter adjusted EPS also a beat. Second quarter total Visa processed transactions coming in shy of estimates at $60.7 billion. The company declared a quarterly dividend of 59 cents a share. Once again, shares of Visa in the after hours higher by just about 0.1%.
And looking at Mondelez again, the outlook does not reflect potential tariff changes, the company said. It's a similar theme that we've been seeing a lot of companies say now, that they just, I guess, can't yet price in the impact of those tariffs.
And Seagate earnings crossing the wire right now. Of course, this is the hard disk drive maker. Shares higher by about 7% in the after hours trade after revenue in the most recent quarter jumped 31%. That was relatively in line with estimates. $2.16 billion. The street was looking for 2.13, and adjusted EPS also beating $1.90 a share. That's a huge jump from what we saw the previous quarter a year ago when they posted 33 cents a share. That $1.90 beats the average of street estimates of $1.73.
Okay, Caesars, Mondelez, First Solar, Visa, Edison, Starbucks, Snap we're still waiting on, but we certainly went around the world when it comes to today's report. A little warm-up for what we have coming later this week with Mega Cap Tech. That is going to do it for our cross-platform coverage of the market close. Emily and I are heading back to radio and YouTube. Alex is heading out. Scarlett and Romain are going to continue on at TV. We'll be back tomorrow, same time, same place, right here on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. That is Emily Graffeo. I'm Tim Stenivek. Emily's in for Carol Masser this afternoon. A slew of earnings crossing just now. If you missed any of those stocks that are making moves, be sure to head on over to the Bloomberg terminal or at Bloomberg.com. I do want to just briefly touch on Starbucks. The company says its turnaround is on track, though, as sales declines persist in the after hours. Shares initially moved lower. They are down right now as we speak by about 2%. Well, let's shift gears and talk about what's going on in China, because Xi Jinping has faced growing skepticism and discontent within China due to strict COVID lockdowns, a slowing economy, and attacks on entrepreneurs. Now, Donald Trump has handed him a gift to rally support at home, an external enemy. Jennifer Welch is Chief Geoeconomics Analyst for Bloomberg Economics. She joins us here in their New York studio for Bloomberg Business Week. It's the Bloomberg Interactive Brokers studio. Jennifer, good to see you. We've been trying to get an understanding about what's happening on the ground in China. I've been there once. It was pre-pandemic. It was 2019, I believe. There was this view that during the pandemic, the COVID lockdowns, sentiment among Chinese locals was very low. There was the property crisis. There is the property crisis. And suddenly, fast forward to, close to halfway through 2025, we're seeing incredible developments when it comes to EVs in China. We're seeing an essential silence when it comes to negotiations with President Donald Trump. What is the environment right now in terms of how the Chinese consumers doing and the power that Xi Jinping has?
Well, I think all of the challenges that you laid out are still there. There's still the property bubble that they're dealing with. There's still the weakened sentiment. There's still the sort of overhang of the COVID pandemic lockdowns and recovering sentiment and animal spirits. All of that is still very much there. But I think what has lit a fire under Chinese people's sort of sense of consumer sentiment and economic nationalism has been this trade war with the United States. And it's been kind of conveniently timed from Beijing's perspective to kind of distract attention from those problems and really draw a lot of unity around this idea of standing strong in the face of this U.S. trade war and these massive tariffs.
Talk a little bit more about just what makes Chinese consumers, manufacturers excited in this environment. What is there to rally around?
I think it's less excitement so much as in Chinese you would say 吃苦 or eating bitter, like being prepared to kind of dig their heels in and hold out in the face of what they see is U.S. aggression in the form of this trade war, right? From Beijing's perspective, from the Chinese people's perspective, they didn't do anything. The U.S. just kept ratcheting up tariffs, and now we're at unprecedented high levels. I think people are sober about the fact that this is going to cause a lot of economic pain at home, especially at a time of economic weakness for China. But at the same time, they're not willing to kind of engage with the idea of looking weak in the face of that. And so that's what I think is this rally around the flag phenomenon that we're seeing and that the piece talked about.
One question that I still don't know the answer to is who has the cards in this negotiation? On the one hand, the U.S. consumer is incredibly powerful, and no question China wants access to the consumer. Speaking of that, we love to buy things. Those things often come from China. Who has the power here?
I think in a sense everybody loses. I think it's a question
that's not good.
Time frames, right? For example, from the U.S. perspective, those prices are going to start to hit a pretty dramatic spike once the stockpiling and other kind of advanced efforts that we saw ahead of these tariffs coming into play start to run out, and now companies have to deal with the tariffs themselves, right? I think the other question is a political question, right? Of, again, from China's perspective, they didn't start this trade war. They're on the kind of receiving end of it, and that's allowing them to dig their heels in a little bit. I think a lot of Americans feel like, sure, we knew President Trump was going to do tariffs at some point. He was talking about that pretty frankly on the campaign trail. This isn't necessarily the trade war that Americans wanted, right? And so
145% tariffs on China.
On your largest source of goods, right? And I think the pain when it starts to hit in a month or two from now when those stockpiles run out, then the key question is who has sort of the political will to withstand that economic pain. But to be clear, the economic pain for China is going to be very tough, especially if the U.S. is successful in convincing other countries not to let those Chinese goods just flow through other markets.
So what is the Chinese government's role here, I guess, in shaping public opinion within China?
So we saw the propaganda machine go into overdrive pretty soon after Liberation Day, facing in two fronts. The internal front, building up that China nationalist sentiment, which, again, they had a little bit of an easy or role to play in that because the people were already predisposed to being upset at the United States, but also externally taking advantage of Liberation Day tariffs to say to the rest of the world, the U.S. is not a reliable partner. Work with us. Don't work with the U.S. to counter us, and let's join up on sides. Now, I think that effort's going to be a lot more difficult in this 90-day pause, where if I'm Vietnam, I'm enjoying right now a pretty good tariff differential with China.
When you were saying external PR, I thought you were going to talk about those videos that went viral of like the AI-generated Americans actually making things.
There's that. There's the sort of like peace in our time video.
Yeah, everybody saw those.
Yeah.
Everybody saw those.
Like very overweight people like making.
Yes, they've got a very effective AI video generation scheme over there.
Hey, you got to run. We really appreciate you staying late to hang out with us. Jennifer Welch is Chief Geoeconomics Analyst for Bloomberg Economics, joining us here in the Bloomberg Interactive Brokers studio. I'm just keeping an eye on what's going on with Snap, the parent company of Snapchat. Shares, you know, I would say in any other instance, Emily, I'd say cratering, but after earnings for shares to only be down 9% in a stock that is so volatile when it comes to earnings, I mean, just look at what it does after each earnings report. This is a pretty muted move. The call hasn't started yet, but there are some numbers that folks are reacting to in the after hours. The company did omit formal second quarter guidance due to uncertain macro conditions. First quarter adjusted EBITDA, though, came in at $108.4 million. The estimate was for $64 million. $65.4 million, excuse me. That was a huge beat. But you know what? That's the first quarter. The suspension of guidance really scares people.
Well, but so many companies are doing that, Tim.
Or they're saying, hey, you know, we'll be united a couple weeks ago. We're going to give you two scenarios here.
Yeah.
We're going to give you the recessionary outlook and the if things, you know, go according to plan outlook. First quarter revenue coming in above estimates at $1.36 billion. First quarter daily active users coming in above estimates at $460 million. Are you a big snapper?
Yeah, 900 million monthly active. Not really, no.
She's not even answering the question.
I'm not. But 900 million monthly active users overall. I mean, maybe if we're not one of them, somebody's using it.
I'm not one of them. Yeah. Kids love, I mean, I'm told the kids love it.
Yes.
Was it big in college, when you were in college?
In high school, like when it first came out, because there's a trend called a streak that I don't even know if this was like self-engineered that Snap.
But you didn't stick with it.
Like I didn't, but people younger than me did.
I feel like everybody's just on
like
Instagram.
you have your streak, you have 500 days of that snapping one person, and you have to use the app every day because you don't want the streak to die.
What happens if you don't?
You're not.
You just, the streak doesn't continue, I know.
Yeah.
Okay. Hey,
you lose out.
Also looking at Starbucks, what's going on in the after hours when it comes to Starbucks. Our own Daniela Sartori out with a story about quarterly sales falling slightly faster than expected. It highlights how hard the coffee chain will have to work to regain lost ground. Shares in the after hours down about 1.3%. Same-store sales declined 1% in the quarter that ended March 30th. That's according to a statement that came out just moments ago. It fell short of the average estimate analysts pulled by Bloomberg. Earnings per share also missed estimates. Hey, coming up next, we are talking everything when it comes to the healthcare sector and specifically weight loss, because there were some stocks making big moves on that front. That's next.
4:21 on Wall Street. We do check markets all day long here at Bloomberg. President Trump has signed an action to avoid the cumulative effect of overlapping tariffs on articles including autos and auto parts. That according to a post from the White House's rapid response account on X. The Dow, the S&P, NASDAQ all advanced today. Stocks closing higher with the tech-heavy NASDAQ 100 just points away from erasing all of its losses since April 2nd. Today we have the S&P 500 index keeping it all in context, up 0.6%, up 32 points. The Dow up 300, up 0.7. NASDAQ up 95, up by about 0.5%. 10-year 4.17%, with the 2-year currently yielding 3.65%. Spot gold down $22 the ounce, down 0.7%. West Texas Intermediate crude down 2.9%, 60.25 a barrel on WTI. Bitcoin meanwhile at 95,102, up 0.6%. Lots of earnings after the bell, and we got you covered. Visa's fiscal second quarter earnings beat analyst estimates. Also, it's authorized a new $30 billion stock buyback program. And Starbucks quarterly sales fell slightly faster than expected, highlighting how hard the coffee chain will have to work to regain lost ground. After hours, we do have Starbucks shares right now. They are trading lower by just about 1.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, thank you, Charlie. Well, there was a ton of news today coming out of the healthcare sector. Novo Nordisk said it will sell its weight loss drug for a reduced price on telehealth platforms, including Hims and Hers Health, which saw its stock gain in the double digits today. Merck also said it will spend $1 billion on a new U.S. factory, and that follows other giants like Amgen and Eli Lilly that have announced U.S. manufacturing investments in the wake of tariff concerns. Here to discuss all of this is Bloomberg News health reporter Madison Muller, joining us in the Bloomberg Interactive Brokers studio. Let's start with Novo and Hims. How much cheaper is this weight loss drug now going to be on, I guess, these different telehealth platforms?
Yeah, so this is about a 63% discount to the U.S. list price that Novo sells Wegovy for. And that's for the pens. Eli Lilly has a similar discounted option that is also a lot cheaper than what it sells its weight loss pen Zepbound for in the U.S. But the difference is that Lilly's drug, the cheaper version, actually comes in a vial, so patients have to take a syringe and inject the medicines themselves. Novo's pen, which is cheaper also, is just a regular injector pen like the ones that they normally sell.
Are they undercutting themselves?
It's a good question. Not really. At least that's the thought.
It seems like
because of the rebates that are offered to insurance. And so it's actually, it wouldn't be affecting the net price quite as much as you would think. Otherwise, there wouldn't be a big reason for them to do this, because then they would be undercutting themselves.
Yeah, so, but the U.S., the term list price, is that misleading because of all the rebates?
It's a good question. That's something we were actually just talking about amongst ourselves over on the health team, that it's confusing, but the problem is that there's a lot of, it's pretty opaque what happens sort of behind the scenes with insurers and PBMs.
Opaque?
Yes,
wow,
exactly.
Hold on.
Like, we wish we knew what rebates were offered to insurance companies. If any drug makers out there want to let us in on that information, that would be extremely helpful. But the truth is we just don't know.
I mean, I will say sometimes I'll look at the statement I get from the insurance company after going to some sort of provider, and I'm like, did I get all of these things? What is all this?
Right. It feels like they charge you hundreds of dollars to just
or charge the insurance company. I mean, I end up paying $40 or whatever.
Right.
But yeah, I was like, okay, I guess.
So Hims, this stock was up 30. It was up as much as 33%. Am I right to think that they used to be a company that just did supplements?
And
now they're doing telehealth and selling weight loss drugs?
They did. They were known for doing hair loss treatments, erectile dysfunction treatments, like a cheaper version of Viagra, essentially, which they do still do. But they really got put on the map last year when they started offering cheaper compounded versions of weight loss drugs, which, not to be confused with what Lilly and Novo are doing, which is just lowering the price, discounting their own drugs. Hims and other telehealth companies were selling these knockoff versions or copycat versions of the medications for cheaper. Hims is still planning to do that, even with this cheaper offering from Novo on their platform, but they're only going to do it in certain cases where patients might need what they call personalized dosing.
Okay.
So that's sort of their workaround to be able to continue doing this.
Okay. So I had the question about compound pharmacies and compounding. That was what was being done over the last few months, or maybe over the last year, as there was a shortage here.
Exactly.
Is that shortage gone? And now that
The shortage
these
is
companies,
gone.
The shortage is
Yeah.
gone. So the compounding's not a thing anymore for these?
It is because there's a little bit of a grace period. So the FDA knew that so many patients, hundreds of thousands of patients, have turned to compounded drugs during the drug shortages of the name brand medications over the last couple of years. Now that Lilly and Novo are able to supply the market and satisfy demand, the compounders are supposed to stop mass producing copies of the drugs, but there is a little bit of a grace period. So by the end of May, they are effectively supposed to stop in most cases. And Novo looked at that and the company was like, okay, we do realize that that is potentially leaving a lot of people high and dry without any options if they're cut off cold turkey. Like, let's partner with some of these telehealth companies to get the real branded medications out there at lower cost to patients.
I want to talk about manufacturing as well, because we did see Merck pledging $1 billion on a new U.S. factory, and other pharma companies also announcing. Just bring us up to speed on how surprising this is to see this sector specifically bringing manufacturing to the U.S.
It's been really interesting to track all of the companies that have made these big manufacturing pledges since Trump took office, which we've seen across the board in various sectors. The healthcare supply chain is really all over the map. I mean, companies have operations in Europe, largely. A lot of the drug companies in the U.S. Ireland is a major hotspot for pharmaceutical companies. A lot of them make products there, various elements of their supply chains. But drug supply chains are also really complex, really complicated. And so they might make one aspect of, an active ingredient in a drug in Ireland and then ship it to the U.S. to package it, put it together. Pharma companies so far have been spared from tariffs because they were exempt from the tariffs that were announced in early April. However, Trump has launched a 232 investigation, which signals that the Commerce Department, directed by Trump, has launched one. So it signals that at some point within the next couple of months, there could be pharma tariffs.
I'm not ignoring you. I'm looking at my terminal because a viewer, listener is getting in touch who's asking about, back to the GLP-1s. If we understand the benefits of this and we understand that obesity in the U.S. is an epidemic, why is the government allowing pharma companies to charge so much money for these rather than sort of subsidizing and saying, wait a second, we can use these as a tool to indeed make America healthihier?
I mean, that's been something that Senator Bernie Sanders sort of took up last year. He had the CEO of Novo Nordisk come in and testify at a Senate hearing about why the price of the medications were so expensive.
This is a European company.
Exactly.
Yeah.
And so that's something that has been interesting. We've seen some top health officials like Robert F. Kennedy Jr. call out the fact that America is sending more money to Denmark for Ozempic. And he's actually, even though he hasn't been overly supportive of using these drugs, he has called out the fact that they're not, the U.S. couldn't afford to cover them at the current prices.
He doesn't love GLP-1s,
He does not love GLP-1s. He's sort of walked back some of those remarks more recently, saying that there is a place for them, but that they're too expensive. We've seen Trump also signal support for lower drug costs. So the argument right now is that while these drugs could be extremely effective, impactful for the health of Americans, they are just too expensive right now, and drug makers have to bring down the cost somehow before Medicare or before the U.S. government will cover them.
Yeah, we've spoken to some states, some officials from states in the last few years. I think you probably set us up with the interviews, Madison, about the idea of public money stepping in to support some of these costs. And they were so concerned about running out of money as a result of the popularity of these drugs and the expense of these drugs.
Yeah, exactly. And we've seen states try to cover these, and what's happened is it's sort of drained the government coffers, but it's the drug companies will argue that over time, those costs, the cost benefit analysis is worth it, that they'll save more costs in the long run by covering these drugs now. There's, I think the math and the analysis on that is sort of like still being worked out, but it's a question that is really still being explored, I think, at all levels. Companies and the government are looking at ways to collaborate on this. But the Trump administration recently said that it would not. The Biden administration had proposed to cover these drugs through Medicare last year. The Trump administration recently spiked that proposal and said that they are not going to do that. They might revisit it at some point in the future, but right now, not a priority for them.
What's the status of the obesity pill? And would that be something that would be less expensive?
Yes, that is the thought, is that because pills are easier to manufacture, there aren't all of the, plastics and the pens that go into making the auto injectors, that the pills would be easier and cheaper to manufacture. We're getting pretty close. Eli Lilly is the furthest ahead with a weight loss pill called orforglipron. It's quite the mouthful.
Is that what they would? That wouldn't be what they would.
That
market
wouldn't be
it
what
as.
it was marketed at. That's just the
Okay.
name of the active ingredient or the drug name. But still TBD on the name. But that pill could launch as soon as early 2026. The CEOs told us so. We're getting pretty close.
What is the status of, this started as diabetes treatments, and then they were being used off label for weight loss.
Yeah.
Is there any indication that this class of drugs will start being used off label, if it's not already, for more things as the research continues to come out?
Yeah, definitely. And the drug makers are also studying them in other indications. So Lilly's running trials, and Novo has gotten some approvals for different indications like heart disease, sleep apnea. They're studying them in knee osteoarthritis and liver disease and kidney disease. And Novo's even running a study of its drug in Alzheimer's. So there's lots of potential benefits linked to metabolic effects and weight loss that the drug makers are looking at. Doctors are already prescribing them off-label for things like PCOS, which is the #1 cause of infertility in women in the U.S., and other things like prediabetes even that you don't really think about, but like preventing people from even advancing to the point of diabetes rather than reversing it. So doctors are using these pretty widely for other causes already.
We only have like 30 seconds left, but we have Amgen pledging $900 million, jobs in an Ohio expansion, Eli Lilly also trying to reshore, and obviously Merck as well with the news today. Is there a sense of who's winning the race of reshoring in the U.S.?
That's a good point. I mean, the interesting thing is we've seen companies sort of like say that they're investing more in U.S. operations and what exactly that looks like, whether it's like new manufacture, like really new building from the ground up a manufacturing plant, or sort of like existing or expanding existing ones, is like sort of unclear. You kind of have to read between the lines a little bit. So on its face, it might look like a company is making a massive investment in the U.S., but really what that looks like is, expansion sort of at different facilities. I don't know who's going to win. I mean, we've seen some big investments.
Madison Muller of Bloomberg News.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. 6 in a row for the S&P 500 index. We had the Dow, the S&P, NASDAQ all advancing today with the S&P up 32, 55.60 where we end the Tuesday session. A gain today of just about 0.6%. Big question, can these gains continue? The Dow up 300 points today, up 0.7%. NASDAQ Composite Index up 95. That was a gain of 0.5%. The 10-year, 4.17%. The 2-year, 3.65%. Spot gold down 0.7%, 32.20 the ounce, 33.20 the ounce on spot. We have West Texas Intermediate crude down 3% today, 60.19 a barrel on WTI. Well, Michael Green is portfolio manager with Simplify Asset Management. And right here on Bloomberg Business Week Daily, he told us he is concerned about a slowing economy.
We're seeing forward-looking metrics, things like rail car bookings, things like trucking indicators. Those are weakening very rapidly. We're already seeing ports slowing down, in particular Los Angeles, which is going to be the first to feel the impact associated with the Chinese tariffs. That's the first destination that you hit. It takes longer to get to the East Coast locations.
Michael Green of Simplify Asset Management. After the bell, we heard from Visa. Second quarter earnings beat analyst estimates as spending on its payment network remained resilient despite macroeconomic uncertainties. Visa, after hours, up by 2%. It did authorize a new $30 billion stock buyback program. And Starbucks quarterly sales fell slightly faster than expected, highlighting how hard the coffee chain will have to work to regain lost ground. After hours, Starbucks right now down by 0.3%. Recapping the Dow, the S&P and NASDAQ all higher today. S&P up by about 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. I do appreciate it. Shares of Starbucks bouncing around in the after hours. They were higher, they were lower. Now they're down by about 0.3%. Starbucks quarterly sales fell 1% in the quarter that ended March 30th. It missed estimates. They've declined. Shares have declined about 7% so far this year. Been there a year. You know him from Chipotle. You know him from Yum Brands. He's there. The company has, quote, real momentum, he says, with its turnaround plan and expects to return to business to growth despite current financial results not reflecting progress. For more, let's bring in Bloomberg Intelligence's senior restaurant and food service analyst, Michael Halen. He joins us from New Jersey. Michael, good to have you with us this afternoon. You've had a few minutes to dig into these Starbucks results. Where is Starbucks in its turnaround?
You know, we were kind of hoping they'd be a little bit further along here in the United States. U.S. same-store sales definitely disappointed in the quarter. You know, in their defense, it was the coldest January on record. I'm sure there were store closures due to the snow in February, and they probably saw some sort of recovery in March. But yeah, U.S. same-store sales came in a little bit weaker. On the positive side, China and international both did a little bit better. International probably has been the biggest concern, and something they're tackling second, right? U.S. has really been the focus thus far in Brian Nichols' tenure. China and international is something we expect them to tackle later this year.
Bloomberg's Daniela Sartori is writing that these earnings reports highlight how hard the coffee chain will have to work to regain lost ground. Who are they losing ground to right now?
You know, that's a great question. You know, there's a lot of speculation that it's to, you know, some of these fast-growing chains like Dutch Bros and Seven Brew. They're also most likely losing some business to people just brewing coffee at home. People are working from home more often, right? And you know, and they're looking to save money because, you know, low-income consumers especially, because, you know, wallets are strapped.
I mean, one of the biggest I feel like personal finance tips that you hear is make your coffee at home. Whether or not that actually builds wealth.
That is something that we heard a lot,
Yeah.
and now a lot of people like to throw water on it.
Right.
Barry Ritholtz, who has the Masters in Business podcast here, he's got a whole part of his book where he's like, just ignore that.
Just buy the coffee?
Yeah, he's just
go
buy.
to
That's what it's
Starbucks?
called. It's called Buy the Blank Coffee. That's
Yeah.
literally what it's called. That's so funny.
No, but it is interesting that
Look.
potentially people are pulling back because
It adds up. It does add up.
Yeah.
Well, how much is it the average, not the average ticket price necessarily, but what are people spending at Starbucks right now?
Yeah, I don't have those numbers for you, but listen, it's when you're on the go, when you're working in an office and you need to stop on your way, right? If you're in a rush, it's a lot easier to stop at Starbucks than it is to make it yourself. Starbucks is working really hard to improve the operations to get customers through the store and through the drive-through much faster, right? That was really a big part of their issues. I would say most of their issues that they've had under the previous management team were self-inflicted. It wasn't because of Dutch Bros and people making coffee at home. It's because the service suffered significantly, right? The speed of service was just way too long. The sequencing of orders, both in the store and for mobile orders, didn't make any sense. There was no real sequencing based on location for the mobile app, which is just mind-blowing. So first in, first out kind of queue, no matter how far away a customer was from a particular store, right? And so these are all things that management is working hard to improve on to get customers to come back, because for the most part, it's a convenience occasion, right? Brian Nickel definitely wants people to stay in the stores more and linger, and they're doing that by, bringing back ceramic cups and offering free refills, right? But a large bulk of their customers, I'd say a large majority of their customers, really want to be in and out quick, right? It's a convenience type occasion, and speed of service is paramount, and that's really been the primary focus since Brian Nickel came on board.
What's the China story here, Michael? Because earlier in our program, we spoke with Jennifer Welch at Bloomberg Economics. She's chief geoeconomics analyst, and she spoke about nationalism in China in the midst of this trade war that we're seeing. In 2024, China accounted for about 8.3% of Starbucks' total revenue. Is that a number we expect to see grow? Because for years, China was the growth story for Starbucks, but that was years ago. Now they got Luckin and so many other homegrown brands there. Are people going to want to support Starbucks?
Yeah, listen, that's, a big reason why Starbucks has probably underperformed their restaurant peers over the last few weeks since the tariff announcements were made, because of their exposure to China, because their stores are company owned in China, right? So there is a risk here. There is definitely a risk of, boycotts. The Chinese government has done it before to U.S. retail companies. There's no reason why it couldn't happen with Starbucks. We're not saying it's going to happen. But what was once seen as a strength, owning their stores in China, I think is now being looked upon as maybe, a bigger risk. And so, it also comes at a bad time, because Starbucks was thinking about franchising that business, selling that China business to a partner and just collect royalties on it. Right. But with all of the tariff drama, I think it's buyers aren't necessarily lining up to pay a premium for that business. So the timing is kind of tough. But I would say that's the number one concern about this company. That's why it's down about 24% from its highs just, earlier this year. And the other concern would be coffee prices. Right. So the tariff drama has caused a lot of commodity deflation over the last 3-4 weeks, but we haven't seen that with coffee prices. Coffee prices remain elevated, and that's definitely a concern. They buy forward and they lock in supply, right? So they may be okay for the next couple of quarters, but further down the line, if coffee prices stay elevated, that's going to hurt margins.
Just 20 seconds. Coffee prices also include tariff implications, Michael?
It could. We're going to hear more on the call, I'm sure, but I can't give you a number on that just yet.
Hey, appreciate you joining us. We're going to let you go and go jump on that call. Michael Halen is Bloomberg Intelligence's senior restaurant and food service analyst, joining us from New Jersey. Looking at shares of Starbucks in the after hours, they moved higher, then they moved lower. Right now down about 0.7%. Coming up next on Bloomberg Business Week, we are taking a look at some stocks on the move today. What also was on the move was the S&P 500, up by 0.6% today. The NASDAQ higher by 0.6 as well. That's next on Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week Daily. That is Emily Grafeo. She's in for Carol Masser this afternoon. I am Tim Stenovec. Emily is Bloomberg News cross-asset reporter. On this Tuesday, April 29th, we're getting toward the end of the month.
I thought you were going to say end of the week, and I got a little
right.
excited.
You wish.
No.
We got a lot of earnings to do before then.
We really do. We have all of big tech, not all of big tech, but we have a lot of big tech coming up this week. Microsoft kicks it off tomorrow, right?
You know, let's just say many of the Mag 7 are reporting this week, including
Right.
Microsoft, Meta Platforms,
Apple.
Amazon. I know Apple's on Thursday.
And Amazon.
I try to think of things one day at a time, Emily.
Okay.
So, you know, just...
Well,
it's
we
like
had a lot of earnings today as well. We got to read into the consumer.
Yeah, we did.
Booking Holdings, Mondelez. There was just a lot of news for those equities reporters overall.
Let's take a look at some stocks on the move today. Joining us now is Bloomberg cross-asset reporter Isabel Lee. Isabel, what are you watching?
American Tower. So the stock closed higher today by 5%. The shares are up after the company reported earnings that beat expectations and gave an outlook that is seen as positive. Emily was asking, what is American Tower? And we said it's a tower. No, it's a wireless communications real estate investment trust. So the
They
first
do the tower. So it's like you have your cell phone.
Yes.
There's a data plan. That data plan comes to you. thanks to the company that you pay. The company that you pay gets the towers
Yes.
from a company such as American Tower.
My husband's best man works there, actually.
Okay.
Anyway,
We'll have to have him on.
First quarter adjusted EBITDA was higher than estimates, as was the revenue, and the year ahead it was the same story. And overall, Wall Street really just dubbed the results as positive.
What about industrials? That's supposed to be a good stock play for this year, right? A good
Definitely.
safety hedge?
Yes, so we have Honeywell edging higher by nearly 6%. They also raised their full-year guidance for their EPS. The company plans to split into 3 separate companies, and they said they will use a multi-pronged approach to offset around $500 million in tariff exposure. We have JP Morgan saying that it's a solid quarter, though not as strong as the headline suggests. But Citi gave a nod saying raising the EPS outlook and the offsetting of the $500 million of tariff exposure reflects, quote, agile operational execution. That's my goal in life, to be called agile.
Okay, noted.
Noted. Thanks.
Take note. You guys are on the same team, so.
Yeah, we're on the same team.
Tell everybody. Pfizer, also stock that you're watching. What's going on with Pfizer?
This one also, rounding up the green on the screen, Pfizer's edging higher by more than 3%. So the company is cutting another $1.2 billion from its spending, while really it searches for the next big hit. That's after its obesity pill failed. And in an interview with Bloomberg, Pfizer said it expects to pull off 2 or 3 deals, which totals around $15 billion to replenish really their pipeline. So we know Pfizer has really struggled after their marvelous year of like COVID-19 vaccine demand, but now it's been struggling, and I think they're really looking for that next one-hit wonder.
Yeah, it's hard when a company is kind of known, even to just everyday people, for their product. I mean, there were memes online about the Pfizer. Did you get the Pfizer? And now that kind of hype around COVID vaccines is over, they really do need to find a new drug.
You know what's interesting that you say that, because that's kind of a good transition to Starbucks, because this is a company that's been working on shedding the image that it's had over the last few years. What's going on with shares of Starbucks, Isabel?
Post-market trading edging slightly lower by 0.3%, so their quarterly sales fell faster than expected. So this just really highlights how hard it is for the coffee chain to rework the lost ground that it lost. Honestly, when you walk around Manhattan, there's just so many coffee shops. And I love Starbucks because I come from Asia and I like the consistency, because my cafe mocha there tastes the same here. But my European friends, well, let's just say they're pickier with their coffee, and some love some shops, some hate some shops. But it's really tough for the company. Shares slipped around 0.3% right now, and so far this year, down by 7%.
Yeah, they brought in CEO Brian Niccol, who of course was at Chipotle before that, as part of a turnaround. I guess it's too early to judge yet. Right? It's kind of unfair to judge how
he came in the
doing.
late summer, early fall is how you could characterize when he got there. More fall, more like it, but yeah, it's still early.
Okay,
But
so
a lot
we'll
of his
start
efforts have
assessing
been-
his performance later. But
Yes, but his efforts have made headlines, like streamlining some stuff, removing a lot of frills. So you're right, remains to be seen.
The stock is down from, it's down like over 20% from highs reached just a few months ago, just February 28th. It's pretty remarkable to see. Okay, you got one more for us. We got a special edition, SMCI, shares cratering.
Yes, and if my screen is correct, it's down by 18% in post-market trading. So that's really stellar. It tumbled after giving preliminary results that fell well short of analyst estimates. Again, it's a sign that its comeback plan has been slow to gain traction. Sales were $4.5 billion to $4.6 billion. That missed analyst estimates by a lot. Earnings, excluding some items, came in at 29 cents or 31 cents. That's also lower than analysts expected. So it's really not that great news for Supermicro. And this used to be like the big company. I remember Emily and I used to cover this because at one point it was in the S&P.
It's back in
what's it really? Okay.
It's back in the S&P now. That's what's so weird about it.
But it hasn't. I mean, it hasn't been for long, right? I think it was added most recently last year.
Yeah, it's one of the newest additions.
Yeah, and
then it cratered.
Yeah, for a while it was a small cap and a large cap at the same time.
Wow, okay. I'm just looking through the write-through from Nick Turner. Some customers during the period delayed their decisions moving sales into the fourth quarter, according to Supermicro. We're going to have to watch this delaying of decisions, because of maybe it's uncertainty. I don't know exactly why that happened, but that's certainly something to watch as we get to more mega cap tech earnings. Big thank you to Bloomberg News cross-asset reporter Isabel Lee. For more conversations like this, Check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcast.